Good morning, traders. Greg here from Master Trader. We've got a neutral open here. We have about a little over 15 minutes to go to the open. So far, we've got, the S&P's trading inside the top of yesterday's bar. We got a wider range bar into this area of major resistance. It doesn't mean it can't continue to push up here, but it is a focal point of resistance. As I covered in a previous video, the pullback on the weekly set up this move up. Originally, I thought especially it was going to move lower toward this area down here, but it made the retest of the bottoming tail bar. It stabilized, and then, as you know, on the news, it gapped up and it's continued to move up into this resistance area here. So we'll see if it consolidates here today, or whether it can just push higher. You can see on the intraday 30-minute chart here, prices are just chopping around sideways here, probably just waiting for the open. And can it go higher and push beyond yesterday's high, or is it going to, a little bit of a correction day here after this strong move up? So just looking at, this trading here, above here, it should continue to move up, and below here, then we see how far it can move down. NASDAQ. Blast up through that resistance there, new all-time highs, and trading inside yesterday's range so far. You can see the consolidation and breakout, turned out to be very bullish, a sideways time correction versus a pullback. Which it happens, this stall here, this slowing momentum, you see these narrowing range bars and narrow bodied bars, tells us that the momentum was slowing. And then here we had that, little breakout failure, which is the topping tail over here, which, almost always results in some type of correction. And it did. My prices held a prior low in the 50 MA. And at this point, the expectation is, just based on the chart pattern, that as long as prices stay above the bottom of this base, and ideally the most bullish scenario on any pullback holds at the top of the base, the expectation must be for higher prices because the trend is up. And we'll see if it does pull back. And it may not pull back, and that is really what it should do with this type of a situation. What it should do is, as it's pulled up here, is chop around here, maybe pull back a little bit, and then go higher. However, if it was to just, run higher, say we got 3 weeks, as prices pull away from an area of congestion, that opens up the possibility for a bigger correction because things get extended away from support, and then there's no reference point where to buy on the pullback, which it did do here. But rather than, pulling back with a correction, it went sideways and built up a new area of support. It looked like maybe the head and shoulders was going to form, but the news got the gap up. And, this is a distribution pattern by definition. Sideways, whippy tails. So we know that there were traders getting out of positions as well as shorting, and breaking above that is going to bring in short covering, and obviously it did. So now we'll just see what's going to set up in the coming days. Dow is up at resistance. It had been showing relative weakness. It stalled at support here. You can see it's already backed off, and there's a little actually breakout failure, which you can see right here. The sideways move, the breakout, and now the move back down below the base. So a little bit of a bearish setup there pre-market in the Dow, and moving below here would be a short. And if you're trading these for a scalp to the downside, bonds, holding here at this support level. A little whippy here. I would just stay away from this. If this is going to turn, just give it some time to do that. If it's going to do it, ideally, for me, I think the pullback to here would be even better or a stronger setup. But as it is right now, just not interested. Oil is pulled back to the 200. The support area is just whipping around here. Again, I would just stay away. A couple of stocks caught my interest here today. U.S. Steel gapping down, and it's, as you can see, it's trading at 24.91, right around here, and it's entered into this void area. You pretty much forget about that. So we've got a possibility for a gap play here setting up, and you can see it here pre-market. Tried to bounce and failed. So that's an idea. Amgen, which we were looking at yesterday, and it had earnings, not much of a reaction. However, we do like the fact that it tried to break down here, and it came right back up. It's trading up a bit here pre-market, and on the weekly chart, we don't like when stocks or markets come down, start with a wide range bar, but the momentum has slowed down here. As mentioned, a little breakdown failure. It is in a little area of support, so on a short-term basis, maybe you can get a move up to the 50 here. I really like these more for day trades, intraday day trades, since it did have this break to the downside here. So that's something that I'm going to keep an eye on to see if it continue its strength here. Keep an eye on the financials. They were showing a lot of weakness. They started to break lower under this base. They've survived at this point. So keep an eye on the financials. See what they do here up against the 50. So a lot of things are short-term extended. We'll see if they begin to pull back. I mentioned in yesterday's video the internals. They are beginning to shape up, but they're not there yet to give us a signal of a larger correction. Not there yet, and we'll see how that shapes up. Have a great trading day.